Hi everyone. So this is my analysis of the commodities and digital commodities for the week commencing the 16th of February 2020. I'm going to start off with gold. So in principle, the thing here really is that there are more buyers than sellers in gold. Gold in the long term is nice and bullish, and even looking at the current monthly candle, looking nice and bullish. And of course, we had a bit of a rejection a couple of weeks ago, and we're still holding up here. My issue is principally there's an uptrend now, confirmed, high lows, high highs, just eyeing these key levels. So if I'm trading this, I'm looking for very short-term kind of moves ahead of these key levels. I was just talking about a couple of weeks ago about this kind of being a little bit choppy and not being the best kind of trading conditions, but it certainly seems to be calming down now. At the same time, it's also consolidating sideways until kind of the average of price, moving averages and average of price start to kind of connect with it, then it's likely to move on. So in principle, still bullish on this, just keeping an eye on these key levels here. Silver is likely to follow gold. I mean, it's not looking very bearish. It's incredibly choppy and volatile. In terms of technical analysis and trading opportunities, for me, that's a no-go. There's just no real great setups there. Looking at copper, which was the most bearish of the bunch, has now gone into an uptrend on the daily. It's also bounced off a strong weekly and monthly level support. So I'm keeping an eye on this nice bullish candle. If we do finish the month off with a nice bullish candle, then my expectation is to see this kind of break to the upside and start to see copper follow through with the rest of the metals. For the moment, though, it's an uptrend on the daily. And just eyeing these levels here, it's actually in a weekly retracement at this point in time. Okay, there's no uptrend on the weekly. It has no trend at the moment, so it's one of those kind of watch from the sidelines or trade cautiously. Then having a look at platinum. Platinum has this really nice uptrend, pulled back, produced a nice bullish, bullish bodied candle. The overall shape of the candle is not that bullish, but it did come off a level of previous resistance to find support. And I was looking to see a breakthrough of the follow through of the high of that candle, and it didn't actually happen. Okay, so there's a strong monthly rejection here. So clearly this level is significant, but the flow of price is more bullish than bearish at this point in time. It's similar in many ways, actually looking at, say, some of the pound Aussie, pound Kiwi pairs. I just want to show you here. We've actually had this thing where price pulls back, produces a bullish candle, then kind of goes sideways for a few days, and then actually takes off. So these are, I took a couple of these trades week before last, hit my 1-to-1 and then got out to basically kind of break even, a little bit of profit, but not really worthwhile. And now, of course, it's taken off with subsequent bullish candles. Same thing with pound Kiwi. Kind of took off, pulled back, and set up, took off, pulled back, and is taking off again. Strong level of resistance. So I'm just pointing out the similarity with the price action on the weekly here, where we've got a pullback and not really a follow through. Price is undecided yet, but is likely to follow through, but there are no trading opportunities anyway, so it's just more of an analysis. Then having a look at Palladium. So Palladium, I was just highlighting, we get a lot of this bearishness here, and it actually looks like it doesn't really want to do a proper retracement back down towards 2000. It's holding, so effectively it's consolidating until the moving averages kind of connect with it, and then it rests, and then it's ready to continue onwards. But certainly there is some strong rejections at those levels, and we finished with a rejection candle on Friday. So I'm looking to see if we do this coming week, if we break and head lower. Basically, we're forming effectively almost like a bullish triangular in terms of a breakout pattern. See, it's overextended on the monthly. Doesn't mean it can't hold where it is for a while. Again, it would still be really nice technically to have this pull back to 2000. So if that does happen, that's where I'll be looking for entries. At this point in time, there's nothing to trade anyway again. Then having a look at oils. Brent crude has broken its downtrend on the daily. It's actually bounced off a weekly or monthly level support, depending on which way you want to look at it, but a key level. All right, it's overextended, so at this point in time, it's reasonable to expect it to attempt to continue to the upside, and that would also follow through and apply to WTI. Same thing, historic level of support, overextended to the downside, bullish candle. I need to see a breakthrough and a follow of that. It's just it's just formed an uptrend on that daily time frame. Then light crude, just to be thorough on this, same kind of thing. So really that's what I'm looking for, is a follow through. If the trend is good on the 4-hour, 2-hour time frames, or even on the daily, then I'll perhaps look for some trading opportunities there. Then moving on to the digital commodities, Bitcoin. These have just been great performers, and I don't really see anything at this point in time that should disrupt that in the longer run. The monthlies are looking really, really nice. The weeklies look a little bit overextended, and it has come into historic resistance levels. So in other words, a deeper retracement on a weekly basis down towards key levels would make sense to me, but the trend appears to be relatively healthy. Ethereum, of course, has been the star, which it should. There's a lot more that Ethereum has from a fundamental perspective to offer its clients. So actually, if anything, Ethereum has been undervalued, but I want to just highlight here that it's gone parabolic. Okay, so parabolic means that when the angle, it goes almost straight up. Okay, this is generally a sign that it's kind of forming a bit of a bubble. There's a couple of the other markets that have gone parabolic as well, so that's a very, very dangerous time for investors to get in. It's almost certainly near the end, and so that's something I want to be cautious of here. The monthly looks good. I'm just going to keep an eye on these key levels, because if price does continue up, that's where it's likely to run out of steam. It can't keep running at full pace like that without coming back. All right, and a lot of people think that things can do that. They need to just take a breather. It doesn't mean that in a year from now we're not sitting up at 350 or higher. It just means that between now and then the market has to take a bit of a breather, come back down and test these levels. On the daily, it's formed a potential swing high. So any pullbacks into the moving averages down towards 225, 250, perfectly healthy and very reasonable. As I said, Bitcoin's also formed something similar. So in other words, a small retracement this week would be acceptable. I really want to see what happens over the coming week. In terms of trading opportunities now, any shorter term trades that I do, I would consider incredibly high risk because of the fact that we're so overextended and due for a deeper pullback. But in principle, the momentum is still bullish. I'm just looking for shorter term pullbacks down, and so I'm certainly not looking to get in here. Even if the market does hit a little bit higher, it's just, as I said, parabolic, and it's dangerous for technical traders such as myself to go ahead and do that.